offices there, and I can see in the report that you're forecasting a 5 to 10% increase in leasing volumes this year. What makes you optimistic about this growth in this sector?
Yeah, I would say two things. One is the services sector. As I mentioned before, we see a resilient services sector, and services sector is highly correlated with demand for office space. So it's very positive for office space. The other thing is the return to the office. If we look data from the assets that we manage across the globe, we see people going back into the office, particularly in Europe. Now, if you look at the capacity of buildings compared to total capacities, around 60 to 80%. That's not far away from where it was before the pandemic. US, different story. It's a bit lower. So we're quite optimistic that in Europe, people are coming back into the office. These are the two reasons: resilient labor market from services sector and actually people going back into the office.
Great. And I also see you forecast a bit of a resurgence in the hospitality sector and also retail. Can you delve into that a little bit and where you're seeing those opportunities?
Yes, I mean, the retail sector has been proven to be more resilient than we thought so. It has been through very, very tough times because of the growth of e-commerce, because of COVID and the pandemic. But actually, retail sales have kind of stood up, and they have been resilient even in times that consumer confidence went down. So looking at the data from the shopping centers that we manage, retail is doing quite well. Physical retail is performing quite well. People have returned to physical retail. That's why we also saw a slowdown in the growth of e-commerce. Now, from an investment point of view, retail at the moment, assets trade at attractive yields. So they could probably offer attractive investment returns with a little bit of yield compression. So income returns and also a little bit of yield compression. So overall, it looks like quite an attractive asset class that has proven to be resilient during challenging times. Now, you mentioned about hospitality. Tourism in Europe has been booming, has been doing very well. We do expect it will continue to do so. We expect a lot of to continue to see travelers from the US, probably lower than in previous years, but this will be counterbalanced by other countries as well. So overall, positive story there for the hospitality sector for all the major markets.
Now, of course, AI is one of these key trends that we're looking at this year and its implications for various different sectors, real estate being one that could be quite heavily impacted, and your report points to the growth of data centers. Tell me about what you're seeing there and opportunities there for investment too.
I mean, data centers is a very, very hot sector at the moment. So the demand does not only come from AI, it comes also from hyperscalers like the cloud services. AI is boosting that demand more. Now, the challenge we have with data centers is that there is lack of land and lack of power. So it creates an imbalance between supply and demand. So that's why we expect good income growth and income returns from that sector. Now, of course, we have to address at some point the power and the power availability mainly, because it also it could impact innovation. A lot of AI startups, they want data center space, and actually there's not enough of that space. So at some point we have to address the power issues, and there are ways of doing this. Even nuclear, for example, at some point some people are discussing about this. But that's pretty much what's happening. Very hot sector, big imbalance between supply and demand.